In this video, we're going to talk about Apex Trader funding. Do they pay out? Everybody on social media says only YouTubers get paid out. Well, if we see right here, January 17th, I requested a payout across 10 accounts after trading this funded account for only 8 days. However, did Apex Trader actually pay me out? Well, if we look right here at this email that I received, congratulations on your PA account, ... We received your payout request, but unfortunately, after review, we are not able to approve the request at this time. Your payout was denied for the following reason: improper risk management. Now, at first, you're like, what is that? I knew Apex would not pay out. What is improper risk management? I have talked about this during the daily live streams that maybe, just maybe, I broke a rule on one of the days, and that most certainly was the case. So what was the rule that I actually broke? And it's one of the rules that I dislike. However, with the prop firms, we have to abide by their rules. And again, I did break a rule. I went back, I double checked, and sure enough, I was over. I wasn't over by a whole lot, but I was over. And the rule that I broke was 30% negative P&L rule. Now, that's something that Apex introduced on Apex 3.0. And at the end of this video, I'll link you to a video of Apex 3.0 with all the new rule changes. Essentially, what the 30% negative P&L rule is: limit on losses. Open trade should not exceed a 30% negative drawdown from the account's profit balance. And here's an example: for a 50K account, if the profit balance is $4,000, a trader should not allow a drawdown to exceed $1,200. Then it goes on to say new low profit accounts. For accounts that are new or have low profits, the 30% rule is based on the trailing threshold, meaning if you have a $2,500 drawdown, don't let the trade go against you more than 30%, aka $750. Now, it does say that this will increase to 50% as the account grows. So now let's look at a price chart and show how I could have gotten in trouble on this particular rule set. And again, it's a little bit deceiving, so I want to make sure you guys don't fall victim to the same trap that I fell in. And if you're wondering, Mike, are you going to stop trading with Apex? The answer is no. Why? Because we have massive leverage, as Apex allows us to have 20 accounts. And if you guys want to make sure you always get the best deal on Apex, make sure to use the link in the description box down below and use promo code Mike at checkout. Now, for this example we talked about earlier, with a $2,500 drawdown, we essentially have $750 of risk. So let's just assume real quick that I got into the trade right here at this tippy top of this wick. What that means is I need to have my stop loss no more than $750 lower. Now, for the S&P 500, that would essentially mean my stop loss has to be no more than 15 points. So I'm going to draw another line right there, and I'm going to label this line right here. I'm going to make the color of that line red. And now, so essentially what I did in this example, I thickened up the lines a little bit, but assuming we got in at this white line right here, as long as price never makes it down towards this red line, I'm never down more than $750, right? Yes, you would be correct, except if you DCA into the trade. And that's where I made a little boo-boo. As the market came down a little bit, I was like, I think it's really going to go. I added to the contract. So now let's say I put a second order in right about there where that white line is. So now I actually have two contracts, and we'd essentially have to split that line in half. I'm just going to draw a smaller line right there. So our average price would be about right here. And now look, from the average price down to the red line, that would only be 13 points. However, 13 times two contracts. Now, if you guys know anything about the S&P 500, the S&P 500 is $50 a point. So $50 times 13 would only be $650 to be down. However, we'd have to times that by 2, since now we have two contracts. And now, as the market, if the market went down to that level, I'd actually be down. I would actually violate the rule. But Mike, the market did not go all the way down to that line. The market only retraced 9 points. Okay, so let's do this example over. 9 points times $50 is $450. Well, since we have two contracts on, we have to times that by 2. And now you can see I would be down $900. Now, normally by default, I have an ATM just shy of $750. However, if you add to the trade, you got to remember, you can't put all your stops at the same location. Why? Because now you've increased the dollar risk on that particular trade. And that's how I fell victim to that 30% negative P&L rule. So you might say, Mike, what happens next? It's very simple. All I have to do is trade for another 8 days. And again, all I have to do is either make or lose $50 per day, request the payout in 8 days, bada bing, bada boom. At that point, my payout should be approved and the money should be on its way to my bank account. Now, if you guys want to learn about all the rules with Apex 3.0, make sure to watch this video right here.